Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to your Tuesday night battleground. I'm Bruce Whitfield. You're watching Share Shootout here on CNBC Africa, first in business worldwide. Tonight's a brand new pairing of contenders. On my right, they're both on my right, I suppose, Byron Lotter, the far right from Vestact. He takes on the mighty contender, the meaty contender of Viv Govender from Vunani Private Clients. Our guests have each pre-picked 3 shares. Their rival has got absolutely no idea what they hold, but at some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they don't like. Each has got 30 seconds. We've got a loud ticking clock, which is annoying and also distracting, which is part of our game, for them to argue their stock pick. And then we interrogate their choice, and it either gets shot down or accepted. If you're stuck on the rules, I'm sure you'll find them somewhere on the internet. The least convincing stock picker is then banished remotely, and that's what Share Shootout is all about. That is how it is won. It's arguably the most vicious stock picking show on TV. Let Share Shootout begin. Byron, I'm going to start with you, mostly because you're the smallest, and I think that you need a head start. So your 30 seconds on your first share, which is the extraordinarily courageous pick of Naspers.
I know you're going to talk about valuations here and the PE, but you can't. You've got to look at the sum of the parts. Their 10-cent stake is worth 206 billion rand. The Mail.ru stake is worth 18 billion rand. If you value that multi-choice business on a 15 PE, which I think is conservative, that's about 120 billion rand. That's 344 billion rand. The market cap's 255 billion rand. It's trading at a 25% discount to just 3 of their businesses. We're not even talking about the e-commerce. These guys are the Google, the eBay, the Amazon of the developing world. It's a fantastic business.
And he's got time to spare as well, feeling gutsy, feeling brave with these. But who says that Tencent is worth, what do you say, 250 billion rand?
It's listed. It's listed in Hong Kong.
Yeah, but who says it's actually worth that? Just because there's
Hong Kong investors. How can you argue with them? They're the ones using the product.
Okay, they're the ones using the product, but we have seen blowouts in the tech space before. Now, just because it hasn't happened yet doesn't mean it's not going to happen. I've been waiting for this for 5 years, incidentally.
Well, these guys have been able to monetize the social network. Like I said, they are the amalgamated version of Google, eBay, Amazon, Facebook. Everyone who's everyone is involved in that, and if you're not involved in that, you're missing out. So they're getting all the revenue from the e-commerce. People chat, people are buying fake games on that network. So I think that has a huge potential going forward. And again, it's the Chinese consumer. They've got 800 million consumers. There's still 700 million to grasp.
Okay, it's the same old arguments that have been put forward for an expensive share, which frustratingly keeps going up in value. It's over 620 bucks a share. A year ago at 400 and something, you wouldn't have believed it would get to 500. It gets to 500, 600 is unattainable. Is this a 1,000 rand share in 2 years?
It could possibly be, but there are certain caveats you must put into play here. Firstly, yes, they are the Googles of China or Russia, but they will not be of the developing world. The reason being is that they are censored, quite frankly. The Chinese market censors them, because the censored quite strongly, and no Indian or no African is going to go and undergo Chinese censorship just for the privilege of using Tencent's chat program. So it's probably going to be linked to the particular country it's coming from. The second thing is they are protected to a certain extent because Google isn't allowed to go properly into these countries because those governments want to protect themselves. Should we ever have any kind of loosening of international restrictions, where do you want to go to? The unrestricted, what's likely to be
Which is precisely why it's not going to happen. Which is precisely why in China it is not going to happen, certainly not in the lifetime of an investment in Naspers.
I'm not quite so sure about that. I think just looking at how these things happen, people in China are getting smarter, they're getting wealthier. They are not going to be able to keep them under the thumb as they were in the past. I mean, a Chinese consumer right now, how many Chinese are studying in the US? They're the biggest student body in the US, and foreign student body in the US right now are the Chinese. Are they going to go back and accept the old system that they had in the past? I don't think so. I think
if it works for them, they will. If you're an elite in an elite society where there are restrictions that work for you, you accept that. And that's the way of the world, especially in quite a tightly controlled state. Byron, when you look at it, is there a chance of the relaxation that we hope in the real world and common decency requires there to be a democratization of the internet?
I agree with Viv. You know, companies like Tencent that allow people to communicate are giving the Chinese people more access to the outside world. But if you've already got a network that's got 800 million subscribers, even if Google or Facebook come into China, what would incentivize them to leave Tencent? All their friends are already members. It's the multiplier effect. If you're a member of Facebook and you've already built up your profile, you're not going to go and leave and start all the way from the beginning and build up new friends again. So I think they've already engraved themselves in that Chinese market. But that's just Tencent. I mean, how can you bet against Koos Becker and his team not to find something else? They're getting big into the e-commerce world, and you holding a Samsung Galaxy, I'm sure you've bought a few things on Kalahari.com. So that is the way the future is going. Kalahari.net. Yeah.
Thank you. Just checking.
Sorry,
we're on the same page. But okay, is this a R1,000 share in 2 years?
I think so. I think that multi-choice business has got great legs to go forward. Everyone loves TV.
Well, it's now costing $620 a month for the privilege of watching this, which is only $20 a day, which for this show alone is incredibly worthwhile. But $620 out of the household budget is
the cheaper version that's actually growing really fast.
Yeah.
And it's access to everyone loves football, and it's access to live sport. And we all know Africa is football crazy. So going up north of our borders, huge.
Is it possible to shoot down Naspers, or will you take?
Well, just on the DSTV aspect, I mean, as much as we love the show here, I got one word for you: Netflix. But that being said,
but we don't have the technology, we don't have the acceptance. Even with Naspers, what they're doing is they download 10 movies every now and again down to your set-top box for you to choose to watch if you want to. They're mostly rubbish, but they let you watch them.
But bandwidth goes at the same rate. You may not notice it.
We've been hearing that bandwidth story for too long. Come on. There's no real competition.
But look, the real part of that business is basically the Chinese operations and the international operations, not the local operations. DSTV could die tomorrow, and it would make very little difference to the actual valuation of the company. And I do think in the international operations, there are issues.
Do you take it, or do you shoot it down?
I will shoot it down.
You will shoot it down. He's feeling brave. Even though he concedes that it could very well be a R1,000 share in 2 years' time, 40% upside from this, potentially over 2 years, he's shooting it down. He doesn't know what other rubbish you've got. All right. FIRSTRAND, Viv Govender. 178 billion rand market cap, the fastest growing, most successful banking franchise in South Africa. Hasn't it peaked?
You've just said it, Jay. They have taken the lead. They are the smart guys on the block.
They're the Naspers of banking, so I'm interrupting.
Yes, they're number 2 to Standard Bank, but they're getting up there. They're getting very clever in terms of their tricks they're using in terms of getting people online, giving them cheaper tablets, giving them cheaper cell phones so they can do their banking online, saving them from having tellers, saving them from having branches, etc. They're growing their online operations, online transactions by 20% a year. They're shrinking the manual one by about 1% a year. They're also expanding into Africa. They're getting a first mover advantage into that particular area. And with technology, that's going to be an advantage.
Okay. Do you like it? I mean, you bank with them. You've got to like it. Otherwise, they close down your accounts.
My biggest thing against the banks, and FIRSTRAND were a first-class example. When the financial crisis happened, they got their fingers burnt big time with prop trading. How do you know what's happening behind the scenes? Yes, the retail banking is very exciting, but what do they do with that cash? And we see the stories coming out all the time. JP Morgan with the whale trader, big, well-established banks with great names, good CEOs, yet they can't seem to control these rogue traders.
Okay, come on, that's a spurious argument at best. You're grabbing at straws. I met Nick Leeson, incidentally, just last week. Nick Leeson, incredibly dodgy character with incredibly dodgy morals back then when he was 25. He's working on something new and fancy, he tells me, but won't tell me what. The days of the rogue trader in prop trading within the FIRSTRAND group are surely things of the past. Basel III takes care of that, doesn't it?
Things of the past, they never were. I mean, we never had that issue in South Africa. This is an international problem. In South Africa, our banks have grown nice and fat off their fees off us. They haven't had to go and do all these crazy little prop trading things on the side. So our banks get their fees from us. But what's great about the financial crisis is it wiped out the Barclays of the world, the JP Morgans. They aren't going to be expanding. Who's that left? It's us and the Chinese in Africa, quite frankly. And in addition to Africa, FIRSTRAND's also going to India as well. So it has operations in the part of the world that's probably going to be growing the fastest over the next couple of decades. It's getting first mover advantage, no competition from international sources. So what's not to like about it?
Okay, what's not to like about it, Byron?
Like I said, the FIRSTRAND prop trading group lost over 300 million rand.
That was then.
What was that?
Yes, I know, but what's stopping them now? And if they are being regulated, they're regulated to the point of utility-like. Yes, there's potential growth in terms of customers, and I do like the FIRSTRAND group, but I just don't want to put my hard-earned cash into businesses that aren't transparent enough.
I just look at the biggest gains that you've seen in stock market history over the last 10 years. banks have sucked. FirstRand has returned you something like 750% over the last 10 years, which is not a bad return. I mean, you've done very well out of it. But there are far more exciting places to make money. Banks are a good place to deposit the cash, good place to go and borrow some, but you don't want to buy their shares. I think you've been suckered, Viv.
No, but if you look at it, banks do well when the economy does well. Look at where they're trying to invest, where the new bases are growing. It's Africa and India. The most unbanked places in the world, places that will have the highest growth rates going forward for the next 2 decades. How can you not be at an advantage in those two areas?
How do you make money out of poor people is really the question. South Africa in the last decade has capitalized on making money out of poor people. Capitec has done it particularly well. FirstRand has done it particularly well. But Byron's not going to buy your arguments.
But
and ultimately,
the way to do it is not by building a branch, but we give them a free app, a free cost-to-you app on their cell phone. That's how you make advantage of it.
Quite possibly. But you're not buying it, Byron.
No. I'll shut it down.
You may regret it. You may regret it. On to your second pick. Byron it is, of course. This is an interesting one because this is a high flyer of years gone by. The World Cup happened. City Lodge then went and built far too many hotel rooms. They're finally getting the occupancies back to the 60% level, far from the 80% where they were at the peak. And you're saying at 120 Rand, at a multiple of 21 times, and a market cap of just under 5 billion Rand, that this is a sitting duck and waiting to be bought. 30 seconds.
Now, these guys are the Mr. Price or the McDonald's of the hotel group, and they're looking to put R1 billion into expanding up into Africa. And anyone who's traveled throughout Africa knows that the hotels are extremely expensive. There's no value for money option there. So this is a great opportunity for City Lodge to be first movers in that market. Like you mentioned, occupancies at 62%, all-time high at 82%. When those start picking up, revenues and earnings are obviously going to follow suit. They have a massive property underpin because they actually own their hotels, which is quite similar to market cap, which allows them to pay a good dividend yield.
All right, there we go. Do you like the City Lodge business model, Viv?
Look, people need hotels, but that being said, it's very difficult to make money in the particular industry. I do think if you're looking at Big C expanding out here, a lot of capital expenditure coming out here with the hope of future growth to justify it, history has always shown that these kind of operations tend to overcapitalize and then have troubles going forward.
But they've done that. They've overcapitalized, they've had their trouble, and now they're sitting at the bottom of a cycle which, based on your argument of economic growth, especially on the African continent, you should be taking City Lodge with open arms and saying, thank you very much, I will accept this one.
No, but the question arises here is that if you just look at the kind of operations you have in Africa, it's not tourism, okay, maybe you have business operations happening as well, but things are expensive for a reason. You want to have your own journeys, you want to have your own water supply because certain of these things are unreliable on the continent. And that's why it's expensive, not just because it's expensive because people only get to the upper end, it's expensive because it's expensive to operate in the particular region.
And that's a good argument. How do you deal with the cost factor? Because in South Africa, of course, they've managed to get their costs down to practically as low as they can go, but you're going into these countries where you can't afford to have empty beds ever, and perhaps that's not a problem. But the operational costs of running a good business class hotel in some of these countries, pretty tricky.
They're a very conservative management team. Clifford Ross, I saw him interviewed on CNBC a few weeks ago, and he spoke about their hotel in Kenya, and they've actually gone into a joint venture. So they're going hand in hand with other companies, and of course, you know, developing in Africa is always going to be high risk, but obviously that comes with a high return. They're not going to go flying in gung-ho. They're going to go slowly. Their first hotel's just been built in Gaborone, which is just on the other side of the South African border, so they'll have all those supplies, and they're going to find their feet slowly. But I just think, you know, like you mentioned, if their economy's picking up, we've got more visitors coming to South Africa, these guys are perfectly geared for fantastic growth.
So, are you taking it or are you shooting it down?
I'll shoot it down.
You shoot it. do you know what number 3 is? Shall I show you? Before you shoot it up. But you're shooting down City Lodge. You can't, with a clear conscience, take City Lodge on as an investment, despite all of the happy stuff that Byron tells us
Yes,
about.
unfortunately.
Sorry, Byron, but you've been shot down twice as well. I think he's playing this game strategically. He knows that the person who stands in the middle, however, never wins.
That's true.
So he's playing a tactical game here. Almost as mad then, in the world of resources, is BHP Billiton, 600 billion Rand company. It's trading on a quite an attractive multiple of 13 times, but commodity prices are coming under a huge amount of pressure. US economy is recovering. We've got nice noises coming out of Asia once again. China is growing. We've got Europe, a bit lackadaisical, but it'll be back in 2 or 3 years' time. And you want to go and buy a resource company. What's up?
Yes, firstly, you're saying the economy is recovering, so therefore don't buy resources. Of course, you're going to the idea of QE, but QE is going to be around for quite some time. There's no exit strategy strategy for this stuff. I mean, you can't have a huge balance sheet like this here and try and get out of the market. What is the Fed going to start doing? Selling bonds? If you just raise the interest rates in the US a couple percentage points, you'll more than triple the deficit. Okay. Next, look at China. China is still demanding resources. It's growing at a reasonable pace. Maybe in a few years' time, it might just switch away from being a resource, big resource importer to something else. But at the same time, we have the rest of Asia. Right now, China accounts for 29% of revenue for BHP. Rest of Asia, 21%, excluding Japan.
Okay, he's sort of 30. It's just an extra 2 seconds, but who am I to stop a man who's in the flow?
I feel like I'm standing next to Eminem.
Except you can hear what Eminem says. All right, I'm joking. It's very good. Subtitles will be up on the rerun. So, Byron, do you like BHP Billiton? It's a hard one to fight against.
Yeah, I must say. I mean, we've been buying BHP Billiton for ages, so I do like the stock. My only argument against it is there is a lot of talk about a Chinese property bubble. You know, I watched a video clip the other day about cities that are uninhabited because there's a massive speculative buy from the middle class into property because they don't feel like they have anywhere else to invest. The stock market's crazy, so they're buying property. And if there is a bubble explosion, commodities are going to take a huge hit. But Billiton are probably the only diversified miner out there that aren't too reliant on iron ore. They've got the big gas assets and copper and coal, which is fine. You know, that'll hold them in good stead if that does happen.
The point is, you've been buying BHP Billiton and you've been recommending to your clients that they buy BHP Billiton. So as a result of that, it's kind of hard to shoot down, even though there is this latent threat of a property bubble, which, let's be honest about it, has been there for the last 5 years anyway.
No, it goes against everything I know to shoot down Billiton, so I won't.
So therefore, you survive on that particular one. Well, it's time for us to shoot off for an ad break, but before we do that, let's just revisit quickly. FIRSTRAND shot down mercilessly by Byron, not because he dislikes the banking group, it's just that banking, it's hard to make money in banking nowadays. Regulators have made it very difficult for the investment bankers to go out and do what they do in order to get the alpha they need to make huge profits. Fees can only go so far, and there's huge regulatory pressure, certainly in South Africa, in terms of fees. Viv argues that, yeah, sure, you put an app on a smartphone and then somebody in Mozambique will bank with you, but that's a long time adoption strategy. That's really difficult because people have got to trust the mobile device enough and almost trusted more than the bricks and mortar. And that's quite a hard sell considering your own adoption, for example, of first internet banking. And are you on mobile banking yet? And you're educated and you've got a smartphone, a smart one as well. Are you ready for that? On that basis, no, says Byron, he's shooting it down. BHP Billiton, he's a sucker for BHP Billiton. He can't shoot it down, even though there is a management change happening at BHP Billiton. There will be a strategic shift. Byron Lotter happily accepting BHP Billiton as a pick this evening on a dividend yield of 3%, on a market cap of over 600 billion rand and a PE of just under 14. He'll happily take BHP Billiton with the caveat that there is the potential of a Chinese blow-up at some point in the future. So Byron's picks, Naspers, we laughed at Naspers, we laughed at Naspers. However, Naspers is one of those shares that has always been expensive, has always been an illogical buy, and is now sitting at over 600 bucks a share. Would you bet against it going to 1,000? Well, Viv would bet against that, mostly on the fact that he is concerned about the potential of competition coming into the Chinese market where most of the money is currently being made. But people have been saying that for years. But Viv, nevertheless, has got the right to shoot it down. He's exercised that right and he has blasted it, but not as hard as he blasted City Lodge. Really not a fan of City Lodge. Now, the big question is, how reluctant is Viv going to be playing a high-stakes game as he goes into the final round of this game to pick the last share on Byron's list? I nearly gave it away. We don't want to give him time to think about it. More share shootout on the other side of this in just a moment.